Hey everyone, and welcome back to The Explainer. Let's jump right in. Today, we're taking a really close, data-driven look at a decentralized platform that has just been exploding with activity lately, and that is Bodega. In the broader Web3 space, getting that initial hype, that's one thing, but actually sustaining and growing your active volume, that's a whole different ballgame. A lot of projects launch with fireworks and then, well, crickets. They struggle to build a foundation of actual utility. So today, we're going to unpack Bodega's recent volume metrics to see what users are actually doing on the platform. Then we'll break down their brand new roadmap, which signals a massive pivot in their strategy. By looking at both the hard historical data and their upcoming catalysts, we can get a really clear, objective look at exactly how they're positioning themselves in the broader ecosystem.
Okay, let's dive into this by starting right at the source. The team recently dropped this pretty bold statement. Something big is assembling, powered by Bodega. Now, we all know the decentralized space, right? Big, ambitious statements and strategic narratives are everywhere. Teams are constantly teasing massive operational shifts before the infrastructure is even visible to the public. But to figure out if a claim like this is just talk or if it's grounded in operational reality, we have to look at the data. That's our goal today, to unpack the specific metrics behind this claim to see exactly what is assembling, how it functions structurally, and if the numbers actually back up the narrative they're building.
And man, do the numbers back it up. Check out this massive milestone the platform just crossed. Bodega V3 has officially hit 3 million ADA in total betting volume. 3 million! For a little context here, ADA is the native cryptocurrency of the Cardano blockchain. And hitting a 3 million ADA volume metric, that is an undeniable proof of concept. A lot of dApps out there really struggle with fractured liquidity and just generally low retention. Reaching this specific threshold proves that people aren't just visiting the platform, they are actively engaging with the smart contracts and committing real capital. This totally shifts the conversation from simple user acquisition to measuring actual sustained participation.
Now, what's really interesting about this slide is how that 3 million ADA actually breaks down. It reveals a super fascinating trend about user behavior. Look at this. We've got over 2.5 million ADA in buys, basically the bets being placed within the system. Right alongside that, over 2.1 million ADA in payouts are being distributed back out to the users. But the real kicker, the absolute most critical data point here, is the comparatively low sell volume, which is sitting way down at about 414,000 ADA. So why does that matter? Well, in decentralized ecosystems, high sell pressure usually means people are just cashing out and exiting the environment entirely. Here, this huge ratio of buys and payouts compared to those tiny sells suggests that capital is actively circulating within the platform's core utility. Users are actually playing the game and engaging with the internal mechanics rather than just treating it as a quick exit opportunity. And that is a vital indicator of structural health.
So with all those operational metrics established, the immediate question becomes, what comes next? Past data is great, it gives us a solid baseline, but in Web3, the landscape moves so fast that standing still is literally moving backward. To understand the long-term viability here, we need to transition from historical volume to their upcoming strategic catalysts. How exactly are they going to leverage all this circulating capital and user engagement? Well, they've laid out a very specific development pipeline, and exploring this roadmap gives us clear answers on exactly where their resources and funding are going right now.
Let's move to and see how this builds out their future strategy. This expansion roadmap is packed with initiatives designed to absolutely scale this platform. First off, they've got strategic investments happening right now to fund further tech development. Second, and this is huge, a Midnight Dapp is dropping soon. If you're not familiar, Midnight is a data protection blockchain running right alongside Cardano. So Bodega is integrating serious privacy-focused tech into their app, which is a massive technical undertaking. Third, they're loading up for launch with anywhere from $500,000 to a cool $1 million in liquidity. And finally, the partnerships. They're bringing in KOLs, key opinion leaders, basically your mainstream influencers, along with professional athletes. When you combine privacy tech, massive launch liquidity, and mainstream influencer partnerships, you're looking at a very calculated, very aggressive strategy for broader market penetration.
So the crucial point is what all of this infrastructure and capital allocation is actually pointing toward. Bodega is shifting its focus, and they are going all in on the creator economy. Every single element of that roadmap we just looked at, from the privacy tech integrations to the athlete and influencer partnerships, is entirely engineered to bridge decentralized mechanics with mainstream creator engagement. Think about it. Historically, the creator economy has relied almost entirely on centralized platforms that basically dictate the terms to the creators. Bodega's strategy flips that script by offering decentralized financial tools directly to these creators and their audiences, giving them completely alternative ways to generate and circulate value. This leaves us with a fascinating dynamic to watch. As platforms start injecting massive launch liquidity directly into creator-driven ecosystems, how is this going to alter traditional monetization models? Could this actually reshape the entire power dynamic of the Web3 space? It is definitely something to think about as these milestones roll out. Thanks for joining me for this explainer, and keep learning.